There is one thing that I love about the stock markets, and that is the correction or the bear market, right? Obviously, we're not in a bear market right now. We're still in a very bullish zone, but I really love corrections because whenever corrections happen, it gives me an opportunity to start accumulating more stocks that are very good and attractive P ratios are also there in these stocks. So two things we will cover in today's episode: 3-4 undervalued companies, when to buy in a correction and what to look at, and how to plan and strategize for it. So let's stay tuned. Number one thing is how to plan for a correction. So what I do is, even I get my salary at the end of every month, which is around 31st to 1st. So what I do is, when we are in a bull market or in a strong upward momentum, I usually invest only 80% of my investable income. So for example, let's say every month I do a 1 lakh investment, right, into stocks, SIPs or whatever. I will only do 80,000 and keep the 20,000 back aside. Now, what do I do with this 20,000? I just keep it either in liquid Bs or I keep it in that new growth, fund that they have, which is the small case growth fund that they have. So I either invest in that or I just keep it in the bank account. No problem at all, right? Because this is going to give me significant amount of alpha or returns when I need to start using this. So what I do is, if the market is in a bull run for 2-3 months, I wait, right? I wait for 2-3 months. I accumulate 20,000, 20,000, 20,000 or 10,000, 10,000, 10,000. I accumulate only to wait for a massive dip or a massive correction. And that is exactly what has happened right now. Now, there are other school of thought saying that, Shashank, I to have my SIPs fixed on 5th of every month. So I personally don't like doing SIPs fixed on every month, mainly because I have the discipline to do it. So what I basically do is I do a manual SIP. So I wait for a shopping day, which falls at least by 150, 200, 300 points. Then I start buying whatever stocks I want to buy on the shopping day. So this is what I basically strategize. So the idle funds are used to invest in a correction market. Now, coming to how do we find good stocks in the correction market, what I believe are really solid picks that I would buy every time a correction kicks into the picture. So let us look at some of these stocks very quickly. Now, before we go to the stocks, let me just quickly show you Nifty, right? So how do we identify these bull runs in the bear zones, right? Or when a correction is required. And as you can see, the market was in a massive up run from here to here, right? We never saw a correction. We only saw a consolidation here, but we never saw the market dipping a little bit, right? Now, finally, after reaching this 22,500, we are experiencing a very significant dip, which is what I really like. So this is where I start buying. I don't know how long this dip will go. This might go here, 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 but I'll keep buying whenever it starts going down because this is a good zone to buy. Now, my preferred go-to stocks when I look at corrections like this are large cap stocks only, right? But large cap stocks also, so many stocks are there. So how do we choose the best large cap stock, which is in a reasonable P, even if you calculate over time, and what are the growth triggers for this particular company, right? Every correction, I might buy different large cap stocks, but I will buy large cap stocks only. So let's look at some of the ones. Now, the first thing that I would really appreciate or really like is Reliance. This is something that I've been buying. Now, you might say, Shashank, this is an ultra large cap. This won't give much returns. It's already sitting at 19 lakh crore company. Please understand, I have a very different approach of looking at Reliance, and I've started accumulating this for the next 10-15 years every month like an SIP. Now, I believe that Reliance Industry is going to be the biggest value unlocking of this decade right now. The reason why I feel is, in the next 2 decades, not 1 decade, next 2 decades, all the kids will get their own companies. Like Akash will get Jio and Jio Financial Services. Isha will get her retail business out, which is Reliance Retail is also priming for an IPO. Jio is priming for an IPO, and the oil to petroleum or oil to chemical business is already there with Anand Ambani. So that is fixed. That I think should be Reliance Holdings itself, right? Now, if this happens and if I'm holding Reliance shares, I get straight up value unlocking with all the other companies that are coming out. Now, Jio, if you look at, is a growing sector. Reliance Retail is a recession proof sector, and OTC, even though it's a sunset sector right now, it is still expanding and going into the green territory, which will give significant returns, at least in my lifetime, is what I believe. So by investing in Reliance, I'm actually getting a value unlock, which might not happen now, but will definitely happen in the course of the next few years. Maybe in the next decade itself, we will see all the IPOs coming out. And if you look at the stock P ratio of Reliance, it is trading at 28 PE ratio. If I don't need to look at the earnings because I know fundamentally it's strong. Now, if I look at the P ratio over time, over history, right, and if I look at a max chart, I don't want to look at very close chart, right? The median PE of Reliance is usually around 18. So right now it is trading at 28. It has corrected from its all-time high of 34. So whenever Reliance goes to 34, it happened once in 2008 and happened once in December 2020, it takes a fall, right? Because it is systematically overvalued at that point. It's gone down. It went down to 22. Now it's back to 28, 29. So this is an okay zone for me. I wouldn't call it the best time or the best zone to invest, but again, my horizon over here is a very long period horizon, so I will keep accumulating, whether it's at 28p, 22p, 21p, but this is something I'm buying only for value unlocking that is going to happen in the next decade. Now the second company that I really like, which is also in the large cap space, which is quite small compared to Reliance, is Pi Industries, which is in the agrochemical space, which is at 54,000 crore market cap. Now Pi Industries is one of the most beautiful companies that has been a consistent compounder throughout its lifetime. You take from 2005 to 2012 to 2015 to 18 to 20 to 20, wherever you had invested in history, and if you had kept it for a long period of time, Pi Industries does really well. Again, because the management is very strong, they walk the talk. And there's a very weird thing about Pi Industries, even though they're in the agrochemical business, even though it seems seasonal, they're not. The very interesting thing here is whenever they plan a capex, they anticipate the demand of the market very well. They don't do capex every time. They only do bunch capex, like batch capex, and that is something that really works out for them. And right now they have announced a 600 crore capex as well for the next year, anticipating good demand coming up in this year and to next year, right? Now if we look at the PE ratio of this company, and if I look at the max chart, we are currently sitting at median PE of this is the median PE is around 36. We are currently sitting at median PE of 35, and industry PE is also 34. So this is like a very good opportunity that I see whenever market corrections happen. Quickly pick up some of this as well, right? Now I get it at good discounted rates. That is how I look at it. The next company, obviously we all know, has taken a massive beating because of the merger, which is HDFC Bank, sitting at a very low price to book of 2.27. Now we don't look at PE ratio for companies like this, we look at price to book, right? Now if I look at the price to book ratio over here and I look at the max chart, HDFC Bank is sitting at its all-time low price to book. The last time it went to this price to book was in 2008 crash. Now after that we have seen it come down to again 2.7. Now definitely this is undervalued, and we all know this is undervalued. In fact, we all know it is undervalued, but still some people are very scared to pick up stake in this company. But you know, the smart capital or the smart money, which is your PE funds and your quant funds and all of that, they have started increasing, the FIIs and DIIs have started increasing their stake quite drastically as soon as this news came out that it is undervalued right now. In fact, I even heard that Parag Parikh has also increased its HDFC Bank allocation. आज नहीं तो कल this will give you systemic amount of returns and it will start giving you good generation of results as well. Now my next in the batch are two very famous companies in India, both in the automotive space, and one of them will win or both of them will win. As of now, both of them are winning because both of them have their own segment. The first one is Tata Motors, again sitting at a very small PE ratio of 17, right? And if you look at the historical PE ratio, the median is 24, but I think this graph is a little off. But either way, Tata Motors is something that I see doing really well in the future for two reasons. The first reason is they have said that they will do a demerger coming soon, right? When they do a demerger, the passenger vehicle business is going to be separate with EV, JLR and all of that, and then the commercial vehicle segment is going to be separate as well. So value unlocking in the passenger vehicle, which is EV, is going to be significantly high. That is why whenever a correction like this happens, Tata Motors becomes an ideal scenario for me, because I know value unlocking is happening with the passenger vehicles, and this is going to give me significant amount of revenue growth with my share price growth as well. And the second key growth trigger here in Tata Motors is that the Tata Sons, which is the Tata Trust, have very clearly come out and said कि boss, हम इसका reserves बढ़ाने वाले हैं and we are going to reduce the borrowings. And as you can see in the last few years, you will see that the borrowings have started reducing quite drastically. They want Tata Motors to become more sustainable and reduce the interest burden, because right now if you look at their interest burden, it is quite heavy at 10,000 crores. Imagine this value unlocking happening at PAT levels, it will be beautiful. Similarly, in this rival, which is Mahindra and Mahindra, also slightly I would say undervalued, sitting at 20 PE right now. And if you look at the PE ratio over time, see this beautiful PE ratio right now, sitting at good zones. Again, this is a company that is growing, will succeed. It has a dominance in the SUV space right now and will continue to do so. I personally have an XUV 700 as well, and it is beautiful. The reserves and borrowings are currently the same, or almost 1:2 or 2:1. So that is also okay right now, but they have more borrowings, which is Tata Motors has significantly more borrowings. But Mahindra doesn't have anything that, okay, I'm going to reduce my borrowings right now. I think they're sustaining and going ahead. But for them to do it tomorrow, it will be very easy, right? I'll give you another notable mention. Another company I would like to look at is SRF, but only reason why I'm not looking at SRF right now is because Even in this market, I feel SRF is slightly overvalued, and this is the scary zone. But this is on my watch list because whenever this falls, SRF is also a company that has been a significant wealth compounder over time, right? And it is doing well, it will continue to do well. So guys, this was the entire video where you understood, if we just recap, what I am thinking, how I look at stuff, and how I like to buy large cap companies at good reasonable PE. It's not like koi bhi PE mein I'll buy any kind of large cap company. That is not how it works. So I accumulate funds and keep it only for a rainy day like this, and then I keep the cash reserves and then I buy it. So it automatically becomes a very smart style of investing, and I get that extra 2-3% compounding that maybe a normal person will not get, right? So this is how I plan my entire finances. Now, if you want to know more, in my YouTube community, I've done a detailed post about this, so you can definitely join it and check it out. And apart from that, if you want to learn more about the stock market, there is a stock market masterclass that is coming out in the month of April. The link is in the description below, so you can definitely look at it and share this with your friends if you haven't, so that they can also learn and understand and how to invest at the right time and make little more money or alpha, right? This is me, Shashank Godappa, signing off. Take care, guys. See you. Bye.